So let's start by introducing ourselves. My name is Lewis Evans. I'm very excited to be joined today by David Cruz, who's a director of insurance alliances here with us at Arctic Wolf. David, can you tell folks a little bit about your background and how you became both so passionate and so informed about the subject of cyber insurance?
Happy to, Lewis. Happy to. So great to see everyone on today's session here. So my name is David Cruz, and prior to joining Arctic Wolf and the Tetra Defense, which was the incident response arm of Arctic Wolf, we joined forces last February. Prior to any time in the security operations space, I actually was a cyber insurance broker for 6 years. I worked at an independent insurance agency here in Wisconsin, and my primary role within that company was to advise all 1,600 property and casualty insurance clients of ours on their cyber risks and their cyber risk transfer options. Cyber risk transfer is the $10 term for insurance, but in the business we call it that because it sounds fancier. But in any case, I started doing that in the middle part of the last decade, so about 2014, when cyber insurance really was a very nascent market. You know, when I started, we had, like I said, 1,500 clients. Probably 2 or 3 had a cyber insurance policy at the time. It just was not a very common product. Over the course of the next 5-6 years, when I was in the brokerage space, that number went from 2 or 3 to about 300 to 400 over the span of those few years. And I'm sure that's doubled in the past 3 since I've left there. So this market really is exploding, and it's it's impactful in so many different ways because it informs how you respond to an incident. It informs what your security spend and almost what your security stack looks like. Anybody on this call that's ever had to complete a cyber insurance application knows how much more, I don't want to say onerous, but how much more rigorous they've gotten over the past few years. In 2017, you could apply for insurance with a 1-page application. Now these applications are 5, 10, 15, 20 pages long or more if you're a bigger, well-regulated entity. So cyber insurance is really calling the shots in terms of what you need to have in place and how it's implemented, things like that. So understanding what some of the motivations are and what some of the history is behind cyber insurance will really help inform, okay, why are they asking for these things now, and what can I expect if I have to file a claim, that sort of thing. So like Lewis said, I've been talking about this for the better part of a decade, so I'm excited to have the conversation with you today.
Yeah, I was really excited when Arctic Wolf joined up with Tetra, which is now our incident response arm, and I was really excited to get to meet David, both because I hope you guys can already tell, fantastic guy, wealth of knowledge. But I also think it's a really important experience, and we've definitely seen that the evolving maturity of the cyber insurance market is really reshaping cybersecurity, and that's a huge trend. We're in this specific security operations space. Obviously, your technology partner who's brought us here today is providing probably a wider range of capabilities that are going to be applicable to these things, but it's the entire cybersecurity space that's really being reshaped by some of the dynamics in cyber insurance that we're going to talk about. Exactly. I'm Lewis Evans. I'm a senior PMM with Arctic Wolf. I work a lot with our technology and managed service providers, and I'm excited to have David on. He's definitely the star of the show. His face is above mine in the slide. I don't know how it's shaken out in the video for you guys, but I'm excited to take advantage of his expertise. So yes, dive in.
Let's do it. All right.
What do you need to know?
Oh, geez. Well, we'll start from the very beginning and some of the fundamentals of risk management. So it's important to note that cyber insurance, on this, it's number 4 here, risk transfer. But remember, we said that's sort of the $10 word for cyber insurance. Risk transfer is just one of 4 things you can academically do with risk. The first thing that you can do to manage risk is to just avoid it. For example, you can't suffer a breach of PHI if you've never collected PHI in the first place. Stands to reason. In 2023, with most of our systems being digitized in some way, shape, or form due to digital transformation, there's your first buzzword bingo of the day. Because of that, risk avoidance in the cyber domain it's becoming less and less of a feasible option, which moves us to the second thing we can do with risk is to mitigate it. We can take some of the sharp edges off. We can take the sharp teeth off of it. So we can acknowledge that, yes, we do have some risk, but we're trying to just make it less damaging should that risk actually manifest itself within our organization. The third thing you can do with risk is to retain some of that risk. And that means keeping some money aside in a kitty that you can use to pay for the cost of risk, should that actually come to pass in your organization. So what that most commonly sounds like in the context of insurance is your deductible. It's also known as a self-insured retention, but it's essentially you owning some aspect of that risk, you having some skin in the game. So one version of that, like it said, is a deductible on an insurance policy. The other retention option is to literally just have an account that's got $2 million in it that's going to cover your incident response costs and cover your liabilities should you actually suffer some sort of data security incident. So anything from beginning to end there is an act of risk retention, and that's the third thing you can do with risk. And the fourth thing you can do with it is to transfer the financial risk of loss to an insurance company. Now, what's critical to remember here is that these options don't stand independently of one another. You cannot transfer your risk of a financial loss due to a cyber incident to an insurance company unless you've avoided that risk where prudent, unless you've mitigated that risk where you can't avoid it, and unless you've retained some of that risk by way of a deductible yourself. So you can only get to number 4 if you've done number 1, number 2, and number 3. And it's actually interesting if you look at that standard risk management framework and apply that to something like, and you overlay that with something like a rapid detection resolution model, there's some similarities that I think are worth calling out. So step number 1 in that detection and resolution model is to identify what the threat is. So if you look at that like avoidance, you identify your threats and you identify what may potentially be an increased liability, like retaining too much data, for example. The second thing you can do is to prepare for that incident and prepare to detect that incident. And that sounds a lot like mitigation, doesn't it? You know, being able to understand, okay, if this comes to pass, how can I shave some of those sharp edges off, take some of those sharp teeth off, and just make sure that if that risk hits me, it just doesn't hit me quite as hard. And then finally, the responding and resolving corresponds pretty well to retaining some of that risk and then transferring some of that risk as well. So there's these processes really are mutually enabling, we might say, especially when we look at the 4 main steps of risk management. You can't transfer if you haven't avoided, if you haven't mitigated, and you haven't retained some of that risk.
And I think the other thing, and I think it's a great point here that all these activities are complementary. But the other thing about this is that these sort of frameworks, both the detection and resolution model that you described and the risk management model, are comprehensive. So just to hammer on the theme of why you need cyber insurance, sometimes we see that people are sort of in a little bit of denial, or organizations are in a little bit of denial about their risk posture, right? And for maybe the shadow version of risk avoidance is risk, let's not think about it, or the shadow version of risk retention. You were talking about retention in a proactive, thoughtful way of, we'll define our deductible, we'll set aside funds to cover this, we'll self-insure. There's retention in the sort of thoughtless or destructive way of, no, we don't need an insurance policy, we'll cross that bridge when we get to it. But risk is not something that you can handle, that you can manage by neglecting it, right? It doesn't go away because you're not looking at it.
Yeah, I mean, we don't want to bury the lead here. To answer the question why you need cyber insurance, it's right here. It's the risk that can befall a company, and a company of any size, any industry, anything like that. So one of the things that we see on the incident response side of the house is the cases that we work as an incident response arm of Arctic Wolf, by and large, aren't Arctic Wolf clients. I mean, that's kind of why you get Arctic Wolf, or why you get, why you work with a good technology partner like you've got, to help, avoid and mitigate some of that risk wherever you can. Where we see claims coming from is from cyber insurance carriers that have policyholders that maybe don't have controls as well implemented as they could be, or maybe aren't monitoring things as well as they could be. And that lets these incidences go from minor to major sort of catastrophes. And that's where we get brought in. And we've worked incidences in all 50 states. We've worked incidences in many countries. We've worked everywhere from 1 and 2 person sole proprietors up to 100,000 employees up, and everywhere in between. There's absolutely no segment, whether we're talking employee size, revenue size, or industry, that's immune from this. And I know that's sort of a common refrain in this space, but maybe it's a common refrain because it's true.
Yeah.
Yeah.
So what do you need? You've done steps 1, 2, and 3. what do you need to do step 4? What's needed to obtain cyber insurance today?
Sure. So what you need to do is you need to be able to demonstrate insurability. That's sort of our core idea that every piece of this discussion is going to tie back to. If you want to obtain insurance, you need to demonstrate insurability. And what that means is being able to demonstrate to a cyber insurance carrier that you have done reasonable and appropriate things to both avoid and mitigate and retain some of the risk that you certainly have. So what that means within the context of cyber insurance is that over the past few years, the industry's really done a good job of sort of boiling down what the key components or what sort of the critical controls are for reducing the frequency and severity of cyber attacks. In no particular order here, the first thing that the insurance industry has seen is that multi-factor authentication that is enforced, not enabled, enforced multi-factor authentication does meaningfully reduce the frequency and severity of cyber claims. Whether it stops the initial access or whether it slows down lateral movement throughout a network, it's something that has a meaningful impact on reducing that frequency and severity. So really, we're at a point nowadays where having MFA is basically table stakes for getting cyber insurance that you'd actually want to pay money for. You can probably get a policy without it. The policy is probably going to look like you didn't have it and it's not what you want. So if you to be able to get a policy you actually want, you're going to have some kind of multi-factor authentication enforced, usually in places like cloud services, like administrator accounts, remote access, backups, things of that nature. So that's sort of tick box number 1. Number 2,
if I can just double click
please.
on a point you made there,
Yeah.
Because I think it's really important. We been talking more and more about cyber insurance, and as these questionnaires and demonstrations have become more rigorous, this kind of slide gets meatier and meatier. I would say I'm sure you've noticed that over you're coming up on a decade now.
Yeah.
And I always worry that there's someone in the audience who's seeing this meaty slide and thinking, man, I got a buddy who will sell me cyber insurance off the back of a truck that's way easier than this. Whatever that looks like. Maybe there's not a literal truck, there's a metaphorical truck. And so I think, David, it's really well taken that this is not one-to-one. Insurers are writing their own policies, but an insurer who's willing to write you a policy without defining these kind of core risk mitigation activities is not an insurer that you want in your corner in the event of an actual incident.
Well, it's not an insurer you want in your corner in the event of an incident. And it's also not an insurer that's probably going to be in the market for very long. Let's remember here, insurers aren't charities. I have many, many friends that work in insurance companies. They're wonderful people. They are for-profit companies, Louis. So, if they're writing policies without requiring these sorts of controls, how long are they actually going to be in this market? And what does that mean for you as a business? If your insurer is cycling through like a revolving door, what does that mean for your long-term risk management growth to have a different insurer every year? And we've seen this over the past few years. Insurers that didn't require these controls have exited the market and stopped offering cyber insurance as a product because they were just so overwhelmed by the claims that they saw that as a for-profit enterprise, they had to look at this and go, man, we are paying way more money than we're making. Maybe we ought to reconsider some things.
Yeah.
So that's just another aspect to keep in mind is if the easier it is for you to get coverage, the more questions I would want to ask that carrier around, okay, so you're not asking me for these things. What are you doing to make sure that you're going to be in the market in a couple of years? Those are questions to ask your broker. So something to think about there. So the MFA piece is, like I said, pretty much table stakes at this point. EDR, endpoint detection and response, is my prediction the next thing that is going to be table stakes. I'd say it's about table stakes for maybe half the carriers out there. The other half, I'd imagine, are going to be coming along soon enough. And really, the important piece here, because we got a thunderstorm rolling through Madison, so if you hear some thunder going on this microphone, it's just Mother Nature saying hi. So the critical piece to point out here is the detection and the response capability. That is what insurers are looking for. Is they want to know that when this endpoint security tool is shooting out some sort of alert at 2:30 in the morning on Christmas Day, that there's going to be some either human or automated attempt to respond to that and stop whatever's going on. we see on a regular basis on the incident response side, whether it's an antivirus tool or an EDR tool, we see, oftentimes those tools are alerting on suspicious activity. But what's happened is that the IT team responsible for monitoring those systems is either just vastly understaffed, they're focused on different things, or attacks tend to happen during off hours. Our busiest day of the week is Friday evening and Saturday morning. That's just when these attacks tend to happen, because threat actors know that we're human beings and we want to spend the weekends with our families and friends. So, having some ability to demonstrate detection and response, either through EDR tooling or some sort of MDR platform, is going to be table stakes for cyber insurance moving forward here. Certainly, if we're talking about reducing the severity of an incident, you really can't do better than just having reliable backups that can be restored in a timely fashion. That is, especially for a ransomware incident. I mean, you can, if you've got good, reliable backups that you can restore from in a timely fashion, you can pretty much tell the threat actor to hit the bricks and just not even worry about that payment, because you've got a reliable way to restore your systems. If you don't have good backups, or if your backups have been encrypted during the course of the attack, then your only path to restoration is to actually purchase the decryption key and pay a ransom to the threat actors. And those, 8 years ago, ransoms were in the $300 to $500 range. Then in 2019, they got to be $5,000. And now we've settled ransom demands upwards of $5 million in some cases. Now, that's certainly a rarity. They're not usually that high, but you can see how the severity concept can really be pushed to its limit if you don't have good backups here. So what that means is that carriers are going to be digging into your backup practices a bit more and trying to understand, what do you have in place? Have you defined an RTO or recovery time objective? Do you know how long it actually takes to restore a backup? We've had instances where we've had incident response clients that had viable backups, but they never actually tested how long it would take to download a full network backup from the internet, and it would have taken them like 7 weeks to actually download the entire backup. So they still had to pay the threat actor the ransom demand, because they had no way to actually restore in a timely fashion. So expect to see carriers digging into that. Some more basics, just like email filtering and web security. Those sorts of controls have been in applications for quite a long time, not going anywhere. Patch management is a huge one. On the incident response side of the business, somewhere around 70 to 75% of all the cases that we see have the root point of compromise as an external exposure issue, whether that is misconfigured remote access, like having unsecured RDP, remote desktop protocol, open to the public internet, or having just unpatched servers that are exposed to the public internet, like Microsoft on-premises Exchange. There was a big vulnerability that launched in March of 2021 that is still representing 25% of all the ransomware cases we see over 2 years later at this point. So carriers oftentimes are going to be doing their own external vulnerability scanning of your network during the underwriting process. So if you've got good patch management in place and you have done your own scanning prior to that underwriting event, it's just all the better to have you discover the issue, you take care of it before the underwriter ever even discovers it, because underwriters are lovely people, but they get heartburn really, really easily. And if they see that you've got unpatched on-prem Exchange or some major vulnerability on your network, that even if you promise to get it done, what'll happen there is, at this point, like I said, it's April 2023. If you still have an unpatched vulnerability from March of 2021, even if you patch it before your insurance would be in force, they're probably still going to deny you, because if you've got an unpatched vulnerability for 2 years, that's going to be a big indication that maybe things aren't up to snuff on your end. So cannot stress this one enough. If you want to avoid attacks, most attacks will say, patch your systems.
Yeah, and coming from the security operations side of the house, that's the exact reason why the industry is consolidated around patch management as the central concept and term, rather than patching or vulnerability or scanning. Right? It's not a question of the ability to one-off detect some particular vulnerability. It's about having the kind of cadence that Arctic Wolf and your technology provider, perhaps under our managed risk umbrella, bring to the table. It's about having the ability to manage these security risks in a systematic and timely fashion. That's going to put you in a good showing when you're going through an underwriting event, as David thinks about, but it'll put you for a good showing when the attackers show up too. And they're not going to call in advance. They're not going to schedule their scan.
Yeah, it's just what is it? A lot of times threat actors will call it a post-paid pen test, which is a little shady, but these are shady criminals. So what are you going to do?
Yeah.
The other thing that carriers are going to look for is, do you have an incident response plan? Have you tested that incident response plan in some way? One of the major annual studies that the insurance industry relies on is the IBM cost of a data breach study that drops every single year. Year over year, that study demonstrates that if you've got a written incident response plan that is with a documented incident response team that has been tested, the difference in the cost of your data breach is a matter of like 45%. It's a huge factor in reducing the severity of a potential incident. So carriers want to reduce frequency and severity of incidences, ergo IR planning and testing is going to be top of mind for them. Pretty much every carrier I've ever met, ever heard of, has employee training as a required control. Some of them will go, some of them might even go as deep as making it role-based, a role-based requirement, saying, hey, if there's an accounting person, their training needs to be specific to things like wire fraud and wire transfer controls, things like that. Whereas if you're in HR, maybe you've got HR security concerns that need to be dealt with. So some may go role-based, some may just require some element of training. But in any case, I would say that's up there with MFA as basic table stakes for getting a policy. And then lastly, again, we look at limiting the severity of incidences, limiting the number of in-service accounts, and limiting the domain, either local admin privileges or domain admin privileges to just the absolute business need individuals. That's something that I'd say the bigger you are as a firm and the more regulated you are as a firm, I'd expect your underwriters to press on those a little bit more. If you're a 35-person tool and die shop, you're probably not going to be pressed too much on your domain, your domain privileges. But if you're a 4,000 employee healthcare system, you can expect to be asked about that.
Yeah, and I think that also is a manifestation. That's sort of the technical condensation of those avoidance and identification practices that we talked about in the previous slide, right? Understanding what data you're holding, why you're holding it, whether you want to assume the risk associated with holding the data or maintaining those systems. And the answer is typically, in today's digital world, the answer is going to be yes a lot of the time, but understanding that, and when you're at that large scale, that starts to cash out in terms of, limited privileges and lower trust architectures, zero trust architectures, need to know design. But it's also, reflects the kind of business practice that you should be, working with your service provider, working with Arctic Wolf on, if you're, if you happen to be a customer, or with whoever's doing your security operations, regardless of scope.
Yeah.
Okay. So great. We covered a lot of ground there.
Yeah.
What can insurance do for you now that you've done all that legwork? You were able to make it through the underwriting event.
Exactly. So I am a big insurance fanboy. I'll be very honest about that. So I'm a big believer in what this industry can enable, frankly. If you think about your day-to-day life, driving your kids to daycare, going to work, buying a home, buying a boat, or because we're all out there buying boats all the time, but whatever the things in your life that you choose to do, imagine doing them if you had to assume total financial risk of every single action that you did. If every time I got in the car, if I caused an accident, I would personally be on the hook for like $50,000 or $100,000, or if somebody was really hurt, $1 million, I'd probably never drive my car anywhere. Like, let's just be very honest. If I had the house that I'm in right now, if I bought that house and I had to fully assume the financial loss if there was a fire or something like that, I'd probably buy the smallest house that I could and make it.
He didn't. David just moved. It's very nice. Everybody, you should all know. That's the key takeaway from this webinar. No, I'm sorry to interrupt you there.
It's okay. No, it's fine. But point being, without the ability to transfer the financial risk of loss to an insurance company, our lives are very constricted and very narrow and not very expansive. So what insurance enables you to do is take big risks and live an expansive life on a personal and professional level. So if we look at what risk can do in terms of acceptance, we can accept the challenge of making big changes in our business. We can accept the challenge of, building a digital supply chain and digitizing our businesses in new ways. And it can help us avoid the risks that are inherent in those big change processes. No change ever goes exactly the way that we thought it was going to go. So if during this big change, there's some risk and a threat actor makes their way into your system and causes you a bad day, you don't have to assume the total financial loss there.
Yeah, and I think that I'm really glad that you highlight that, because another sort of recurring theme in a bunch of different areas that I touch on Arctic Wolf is there's often a sense of security as a cost center. And the more that you get, tell me if this is a derogatory term, but especially the sort of more paper pushy corners of the security space, like insurability, like compliance, they get really thought of as the sort of, well, I need to do it. Eat your vegetables headache, cost center, I guess, is the polite, business boardroom level way of talking about that.
Sure.
And that's only half of the picture. What we're really talking about across the board, and what your solution provider is doing for you every day, is security and insurability and compliance, and all these activities are ultimately business enablers. In compliance, there's a whole realm of contracts and relationships and business opportunities you can go after if you can achieve and you can demonstrate these kind of activities. With insurability, exactly as you've outlined, the ability to both achieve and document your security and therefore transfer some of your risk means that you can go after, you can go after growth goals. You can make the big investments that are going to make your business more economical and efficient. It opens up all of these opportunities. And it can be important to keep that in mind, especially, if you're a professional in a space where, you're sort of always advocating to this to skeptical other stakeholders who are saying, well, that sounds like a big cost center, right? It's no. Everything that the business wants to be able to do sits behind the ability to embrace new technology, accept the risks associated with new technology, demonstrate that you're using it safely and effectively.
Yeah, insurance enables secure value creation. That's maybe, if you're going to wrap that all up, security enables value creation with confidentiality, integrity, and availability. That's what we're aiming to do here. So that's one. Insurance allows you to accept those big challenges that drive new innovations in new business. If we get very tactical with regards to what insurance and what insurance carriers and brokers can do for you, a lot of times they're able to offer really good guidance in terms of how much insurance, frankly, do I need as a business? If I'm a 35-person tool and die shop, or I'm a 4,000 employee healthcare system, I'm going to have largely very different insurance needs. So a good insurance broker or carrier should be able to advise you on at least broad strokes. Here's what the most likely outcome of risk is for your company. Ergo, what sorts of limits should you carry? That's something that they ought to be able to do. Insurance is also able to bring you and put you in touch with risk mitigation resources like Arctic Wolf, like your technology partner, or the various controls that you need to get insurance. A lot of times insurers are going to have relationships with those control providers to make sure that you can get what you need to actually be insured. Again, if we get very tactical here, what insurance can do from a claim and recovery standpoint is deliver the framework that you need for an incident response effort. Most organizations, thankfully, probably can't name a single cybersecurity incident response firm off the top of their head, which is good. I don't want to be on a first name basis with my local paramedics. If I know them really, really well, that means that I'm probably not as healthy as I ought to be. So the fact that most businesses couldn't name a single data privacy breach coach firm, couldn't name a single cybersecurity incident response firm, or a personally identifiable information breach notification firm, like there's a whole ecosystem,
a whole universe. And this could be a whole different webinar. This is called Why You Need Cyber Insurance. We could do an entire webinar on the 20, what's the every person that you meet in heaven, the 20 different kinds of firms you'll have to call in the event of a serious incident.
We're doing that. That's a great idea. But that's exactly it. Like, most people on this call probably don't know what the concept of data mining is. And that's good, because that means you haven't needed data mining services. But if you know for a fact that you had a 5 terabyte hard drive breached by a threat actor, and you've got a legal obligation to notify everybody that's identifiable in that 5 terabyte hard drive, are you going to just double click every file and look for the people who you have to notify? No, there's whole service offerings that make that much more cost effective that you don't know about until you actually need them. And insurance provides the framework for getting you in touch with those providers and covering the cost of their services too. So So that is what insurance enables a business to do, from big picture challenge acceptance to very narrowly tactically focused. Who do I talk to when stuff's hitting the fan? It's going to enable every part of that.
And before we go forward, I remembered something I wanted to say in the previous slide, and I'm going to be terrible. I'm going to skip us back, and I'm just going to double click, highlight one more thing. By the way, David has figured out how to do the red underlines in Zoom. Magnificent. I have no idea. He's a wizard. Don't let him tell you that he has a non-technical background. But another thing that you talked about in each of these was not just being able to achieve these security capabilities, but also to demonstrate them to the insurer.
Right.
And that's another thing we think about a lot at Arctic Wolf, is that especially in the context of insurability, context of compliance, and some other contexts as well, it's not enough to just do multi-factor authentication, right? It's not enough to mandate that as opposed to make it available. You need to be able to demonstrate to the satisfaction of a third party that you're doing that it's required, that your systems are locked down in that way. And that's sort of a subtext for each of these items, is not just, oh, okay, how do I accomplish this task? But during that underwriting event, how am I going to demonstrate it for them?
Yeah, no, that's exactly it. Being able to demonstrate proof of performance it's one thing to say that you have it. It's another thing to show that you have it.
All right. So having skipped back, go forward. How is
skip back to jump forward?
Yeah, exactly.
You got it. So this is where my background as a broker really comes into play. So cyber insurance, like pretty much every other kind of commercial insurance, isn't something that you can purchase directly from the insurer. Insurers rely on brokers again, if we go a little academic here, insurers rely on brokers for risk selection and to help businesses prepare for the rigors of underwriting. That's what brokers that's what carriers task brokers with doing. So if I'm a business that wants insurance, my first step is to meet with a commercial insurance broker to discuss cyber risk mitigation strategies. Ideally, you're going to be talking with a broker that has a good amount of experience in the cyber insurance space. That's not a given by any stretch in this market here. So if you've got your standard business's commercial insurance broker, sometimes it makes sense to have a separate broker just for your cyber insurance that maybe is somebody that specializes in this. You don't want a generalist handling this line of coverage. You want a specialist handling this. So that's going to be step number one, is meet with a broker that understands the cyber insurance ecosystem to discuss risk mitigation strategies and to talk about what the insurability journey, what that process looks like for you and your business. The second thing that you're going to do is you're going to complete what's called an insurance application. We'll just call it a questionnaire here because we sometimes have confusion around insurance app versus a web app and all this kind of stuff. So you're going to complete an insurance questionnaire that is going to have you document proof of performance of a wide variety of security controls. These applications are going to have some broad similarities, based on the claims history that each carrier has. They might be a little bit more skewed to one carrier might stress vulnerability management a little bit more than another. One carrier might stress backup and recovery more than another. And that's just based on the types of claims that they've seen over the years. But by and large, there's going to be similar themes like the ones we discussed a couple of slides ago, like MFA, EDR, backups, IR planning, all that. There's going to be some consistent themes that every carrier is going to touch on. Once you've completed that questionnaire or that insurance application, the broker is going to take that to the insurance terms and insurance carriers and negotiate the best possible policy terms. What best possible terms mean in this case is the broadest coverage with the most acceptable premium and the most acceptable deductible. The outcome isn't always, hey, I want the lowest premium I can get. Some businesses are willing to pay a higher premium in order to have a lower deductible. So the incentives for your business are going to rely a lot upon what the financial condition of your business is. How much premium can you afford to pay up front, and how much deductible can you afford to pay should an incident actually happen? Your broker is going to help you navigate all that and tailor a policy that's really reflective of the financial conditions of your business. From there, the broker, so where we are in the process is we're right here right now. So what the broker does during this stage, it's their job to be a risk storyteller. A good broker is a good storyteller. The broker's job is to tell your risk story to the insurance marketplace and generate enthusiasm and generate competitive market conditions on your behalf. The best possible state you can be in is to give your broker a really strong risk story to tell, so the broker can go to these insurance underwriters and say, hey, guess what? You would be lucky to insure this company because they're never going to have a claim. And if they do, it's going to be a small one, and you're hardly going to notice it. That's the kind of excitement that you want your broker generating amongst the underwriters, because they're going to say, hey, this is free money if I issue this policy, because they're never going to file a claim because their risk story is so good. So you want to arm your broker with as much ammunition as possible to be able to tell the best and most exciting risk story, so that they can generate competitive market conditions amongst the insurance companies. Assuming the broker has done all of that, the broker will then present coverage options to you and discuss any sort of last minute control requirements that the individual carrier that you've chosen to move forward with is going to have. After you've completed those sort of last minute control requirements, at that point, the business selects the policy that best suits the financial needs and conditions of their business. And then voila, you have cyber insurance. The key takeaway here is to remember that you have to work with a good commercial property and casualty insurance broker. And the more you can work with a specialist in this space, the better. The way that you can identify is if you're working with a specialist in the space is if you go to whoever your insurance agency or your insurance brokerage is and say, hey, is there anybody at this company that has the word cyber in their job title? That's a good place to start. What happens in a lot of brokerages nowadays is that you wouldn't expect every broker at, say you've got a brokerage that's 400 employees, for example. You wouldn't expect all 400 employees to be experts in cyber. But what you would expect is there's a team of 3 to 5 individuals called a center of excellence that every other broker can rely upon to place that insurance most effectively. That's what some of the more leading brokerages are doing these days. So you want to ask, do you have a team, an individual or a team who is responsible for keeping a pulse of the cyber insurance market and the incident response market, and making sure that you are talking to somebody that's got that knows exactly where the market is on any given day, so to speak. So once you've identified a brokerage that has those resources, you're working with a team that's going to be able to give you the best possible options. If there's nobody at your current agency or brokerage that has this specialty, that could be a good clue to say, hey, you know what? I need to go and find a cyber specialist. I can keep all my other insurance with this broker because I've probably got relationships with them. I like them. But this one line of coverage, maybe it's worth splitting out to a specialist, just because it's a very unique line of coverage, we'll say.
Yeah, and I really appreciated your point there about storytelling. When we went 2 slides back, and I love that slide so much because I keep clicking back to it. I'm from the security operations side of the house, so all those logos on there, I really. Oh yeah. I'm like the kid in the dinosaur room in the museum. It's like, we can go back to the dinosaurs. It's like, no, Lewis, we got to go see the fish now. But anyway, I think the point is when you talk about a lot of those security capabilities, there's often this sort of like mechanistic checklist theory about it, and that's true, right? If you're going through an underwriting process and you're presented with a questionnaire, you're going to have to fill out every box, and some of those boxes will be for check marks. But it's also the case that you're talking about working maybe with your solution provider, with your solution provider's capabilities, like security operations with Arctic Wolf, to tell a comprehensive story about what kind of risk your business represents and what kind of security strategies and decisions and activities you've implemented, right? And so what we're seeing as cyber insurance matures and as these kind of processes get more rigorous is it's not just about across the board implementing a 10-item checklist and then a 20-item checklist and so on and so forth. It's also about understanding what's an aggressive security strategy for your organization, and that's going to put you in a much better position.
Exactly. So I'll tell you how this goes when you're an insurance broker. What'll happen is, after my client has completed their insurance questionnaire, their application, what I as a broker then do is turn around and I send that to maybe 6 or 7 different underwriters that I think might be a good fit for this company. Within probably a day or two, I'm going to get a call from every one of those underwriters. And what they're going to say is, say we're dealing with ABC Tool and Die Shop. I'm going to get a call from them and they're going to say, so tell me about ABC Tool and Die Shop. And then they're going to stop talking. And then it's my job as a broker to just sell them on why they should insure this company. They've got the application. They reviewed the application. They know exactly what this insured does or does not have. What's going to make or break the deal is my ability to tell a good story when I get that call from the underwriter, and I'm going to get a call from the underwriter. So tell me about ABC Tool and Die. If I don't have a good answer for that, or ideally, if my client hasn't armed me with enough resources to tell a good story, it's not going to be a good outcome. But if my client has just a good stable of details that I can tell during that risk storytelling process that occurs during every underwriting process, that's going to result in a better outcome for that insured.
Yep.
Mhm.
So we've transferred some risk, but has it gone away?
You know what? We would be absolutely remiss on a discussion about cybersecurity and insurance if we didn't have some aspect of claims management discussed here. Again, we talked about insurance providing a framework for incident response. You need to have an internal framework for that as well. Again, if we think about what's the most effective way to get the best insurance terms year over year over year, the very best way to do that is to A, not have a claim, or B, if you have a claim, make sure it's a small one that was well handled. That's, over and above everything else we've talked about, even all those controls we talked about. The best way to ensure year over year successful insurance renewals is to avoid claims, or if you have claims, make them small and well managed. So the way that you can do that as a business is, should you actually have a claim, document who you can engage and have a written plan of, okay, who are we engaging, from our security team to our technology partners to our insurance broker to our insurance carrier to everybody down the line. So understanding who we can engage is critical. The second thing to understand is, if it's a ransomware event, who has the authority to approve a ransom payment? There's sort of a misconception out there that the insurance company or the incident response firm or the attorneys that get involved, they're going to tell you pay or not pay. That's not the case. It is entirely your business's decision to own. You will act on the guidance of your attorneys that can provide legal ramification advice. You'll act on the advice of the cybersecurity incident response firm that can tell you what to expect if you make a payment to a certain threat actor group, but the decision to make or not make a payment is entirely owned by the business, not by anybody else. Who's going to log and track scopes of work during an incident? How do we report a claim? How and when do we communicate once the claims happen? Do we, having a method to communicate outside of our normal email chain, for example, because the threat actor is often inside your email inbox during these incidences. Documenting some of that is going to make sure that you are going to, if you have a claim, even if you've transferred the risk to an insurance company, whatever risk still exists for your company, you've made an effort to minimize that as much as possible. And again, if we're working on the theory that the best way to get your insurance terms successfully renewed is to have no claims or low dollar value claims, making sure that we've managed the risk that still exists is one of the best ways you can do that.
All right. So that's the sort of end-to-end story of getting and having a policy. What's next? We talked a lot about big transitions historically in the market. What's coming up?
Yeah, absolutely. So in the insurance business, we talk about hard and soft markets. A hard market is when rates are going up, coverages are being restricted. It's really hard to underwrite a policy. There's a whole host of reasons why that might happen, but we've been in probably the hardest market the cyber insurance world has ever seen since probably mid 2020. We all know what happened in early 2020, and that certainly influenced the number of claims that we saw, the number of ransomware attacks that we saw, and that directly influences the availability of coverage and the cost of purchasing a policy. So after about a little over 2 years, we're moving into a softer market. Where we stand right now, we actually have seen a pretty good uptick in ransomware events since March of this year. So that's as hot off the presses as you can get. So how long this soft market lasts, we'll see. But right now the market is softer than it has been for the past couple of years. And what that means is that rates are leveling off, rates are even declining in some cases, and certain controls are, the table stakes aspects of them are still present. But maybe underwriters are getting a little bit more understanding of, hey, instead of needing this in place before we issue the policy, we're letting you have 30 days post-policy issuance to get it in place. Maybe they're a little bit more flexible in terms of how long it takes you to get a control in place. But the fact that you need that control hasn't gone away. Just the timeline upon which they're willing to accept you proving it is a little longer. So a couple of things that are driving this, again, over the past few years, we definitely saw increased severity of ransomware and potentially some coverage restrictions based on the type of industry that you're in. Business interruption losses have been a huge aspect of this as well. If you don't have good recovery methods, you're going to have a longer downtime experience as a business, and your insurance policy is going to cover lost business income during that time. So if you can minimize that business downtime, you're going to have a lower cost of a claim, basically. Beyond that, we won't go into every single one of these points because that would take for the next couple hours here. But ransomware has been one of the driving aspects of that hard market, and we did see a decline in that since the beginning of the Russia-Ukraine invasion up until about February of this year. That was at a very low level. We're starting to see it tick back up again, but that really influenced the softening of the market, so to speak. Data breaches as a whole kind of, I don't want to say weren't a thing necessarily, but those were the hot claim in sort of the latter part of the 2010s or the 20aughts, or I don't know how we're referring to that decade, but 2015 to 2020. That those data breaches and third-party lawsuits were a much more prevalent thing in the insurance industry, or than they really have been over the past few years. As more and more states are passing privacy laws and things like that, we're expecting that to sort of tick back up in importance, but that's been relatively calm, we might say, over the past few years. Supply chain attacks, we just saw one a couple of weeks ago with 3CX, the VoIP phone provider. The idea that you can inject malware into a system update that goes out to everybody. We saw that with SolarWinds a couple of years back too. Those remain a concern, and those are top of mind for insurers because they're worried about aggregation risk. How many of my clients are using this phone system? How many are using this piece of software? So, what is one vulnerability could become 10,000 claims pretty quickly. So they're trying to keep an eye on that. And then lastly, the insurers are continually grappling with, okay, what does cyber war actually mean? And how do our policies reflect that? So some carriers are trying out different sorts of coverage limiting language around that. The fear of that as a business is something that I personally wouldn't be terribly worried about, but again, worth talking to your broker. Hey, are there any sort of limitations in my policy if it's an act of cyber terrorism or cyber war or something like that? Your policy is going to define what both of those terms mean. And so it's just good to have a sense of where those things are, because all of these four topics are sort of moving pieces within the industry right now. And being able to talk with a broker who's a specialist in this space will give you a very clear picture as to what your exposure is to any one of these four areas.
All right. So we're coming up on the end here. Let's talk a little bit about what Arctic Wolf and your technology partner can do together to help improve an organization's insurability.
Exactly. So really, the Arctic Wolf's focus is on security operations, because again, on the incident response side, we see all the time, the tooling is often there. It's the operational enablement that is often lacking. So the ability to have 24/7 eyes on glass and to send up the flare when something's happening, that is how we meaningfully can reduce frequency and severity of events. And if you do that, you're demonstrating insurability and hopefully seeing some either reductions in premiums or whatever improved coverage terms means for your company, whether that's lower premium, lower deductible, whatever. We're getting better insurance outcomes, frankly. And the way we do that is 24/7 eyes on glass with security operations delivered via concierge service. Louis, can you expand on that concierge concept a little bit?
Yeah, absolutely. So what that means is that we'll have dedicated security engineers, security operations experts who are working with your solution provider, your technology partner, in a consistent, ongoing way. They're going to understand the services and the technology and the stack that your solution provider is using. They're going to understand the needs of your business and of the other businesses that your technology partner is working with. And they're going to be able to use that insight to drive actionable outcomes, both in an ongoing project of the security journey, helping all the businesses we work with to continuously improve their security posture and harden their environments, and also in the event of a specific incident. It's always, I always try to be, I'm not trying to get too salesy. So you saw me pull the reins back then.
Yeah.
That's something we think is really valuable. We think it's that building that kind of consistent relationship and having security operations experts who know the technology partners they're working with, know what they're talking about, know the environments that they're helping to protect, are really going to make a difference for the risk. Other organizations have other approaches, and I encourage you to partner with organizations that work right for you. There we go. Is that, did I strike?
You landed the plane, Lewis. Good job.
Thank you. Thank you. Yeah. Not too high, not too low.
There you go. Yeah, the other aspect of a good security operations platform is the ability to be vendor neutral. You know, the idea that we can transform all of our controls all at once to whatever the best in class tool is. I mean, that's great. If we can find the budget for that, even better, but that's probably not realistic. So being able to work with the tooling that you have in place, you know, like we had said earlier on the incident response side, even if you're working with kind of a legacy antivirus tool, oftentimes you're still going to get some kind of alert, some kind of a notification that something is suspicious within this environment here. So being able to take in whatever data is needed and then enrich it with our threat intelligence from our Arctic Wolf Labs team, that's a critical piece. Again, we talk about reducing the frequency and severity of incidences. Having a good incident response capability is going to certainly reduce the severity of an incident because we're reducing the time it takes to get a team in place to begin working on restoring systems. We're reducing the business interruption aspect, and both of those are major claims cost drivers in the insurance space. And then certainly proactive planning to learn lessons from those incidences and minimize future impact. It's sort of you wouldn't think about it this way, but the most attractive time for an insurer to offer a coverage proposal to a business is often within the 6-month period after they just had a major incident, because security will never be more top of mind for a business than it will be in the immediate aftermath of a major attack. So if you can demonstrate that you've learned lessons, that you've changed things, that you've made improvements after a security incident, that's often going to be a very attractive thing to carriers because they know, okay, well, there's probably budgets that have been opened up. Executive leadership is keeping an eye on this. It's so top of mind for everyone in the organization. If you can prove that you've learned lessons, that's going to make you a very attractive insurance prospect in the marketplace.
Yeah, and you know, and that's something that I think aligns with how we talk about security operations and how we would work with your technology providers, your managed service providers. You know, whether an incident is a major attack or you know, an ongoing nuisance, I guess to try and pick a term for the other end of that spectrum. You know, we're working in a continuous way to enhance our you know, we're working with your solution providers in a continuous way to enhance your security, and that ultimately you know, we're going to be trying to communicate that to you, or document that, validate that activity, and that's going to feed into the story that your broker is able to tell, right? And you can have the sort of big version of that, which is, oh my gosh, you know, right after a serious incident, look at all these investments, look at all these decisions that we've made. And that can also be, you know, hey, these are the proactive steps that we've taken over the past 6 months. And, you know, and none of them corresponded to an incident that would have represented a major claim. But they, you know, they indicate that in partnership with our service provider and in their partnership with their security operations vendor, they're working continuously to enhance security for the business that's ultimately, you know, like you said, going to end up in the hot seat, you know, owns the risk or transfers the risk.
Exactly.
Pre and post incident. Oh, I should have clicked that one earlier. So I'll talk really briefly about what, man, there are a lot of these, about the capabilities that we offer at Arctic Wolf. And, you know, there are a lot of security operations providers out there, and undoubtedly there are other security capabilities that your solution provider is also making available. What we do is we have this open XDR architecture, what we call the Arctic Wolf platform. We're ingesting security relevant data from across systems that you have and that your solution provider supports, bringing that all into one environment, and then making capabilities like managed detection response, cloud detection response, managed risk, security awareness, and incident response available on top of those. So we're building a stack that's going to ingest the entire universe of security data, and allow those to be operationalized. And we're operationalizing those through the concierge model, which is a named security operations resource who's working with your solutions provider, providing tailored tuning and optimization to business contexts, delivering threat intelligence and situational awareness, and supporting them as they implement a proactive security journey for your business. And these are capabilities that are going to allow you to set a forward-thinking security strategy, and they're going to allow you to mitigate those risks and tell that risk story to an insurer about how you've worked effectively with your solution provider and with you know, with the capabilities that Arctic Wolf is providing to that provider to change the risk profile of your business and make the risk something that you can transfer and something that will allow you ultimately we hope, but this is we're not an insurance provider, but it's going to allow you to have that effective conversation with those brokers, ultimately with those insurers and underwriters, to achieve the risk strategy that you want for the business. So, I that was the end of my little mini spiel. Any final takeaway thoughts, David, you want to share with the audience about cyber insurance, how they should think about it and what they should go after for it?
Yeah, really, I think the point that I would really stress here, and we hit on this a lot, especially in the second half of the presentation, have a good risk story that tells the underwriter how you're aiming to reduce the frequency and severity of events. Not events, of security incidences, we'll say. If you can effectively do that and sort of line that up in sort of bullet points for your broker to hit on when they're getting that call from the carrier saying, hey, so tell me about whoever. If you can do that, you're going to essentially give yourself the best possible chance of getting the best possible insurance outcome.
All right. Well, thank you so much, David. We really appreciate you bringing your insight to this. Thank you again to our hosts for giving us the opportunity to share some of these insights about cyber insurance. And with that, I'll give it back to your solutions provider. Thanks again.
Thank you, everyone.